Now we have a very complex example, because I just did not want you to bother with this small example. So now please wake up and please be concentrated, because some people think that this is really difficult. Well, some agree, some don't. So this is the initial table of the production. So I will tell you, the company thinks about the project, and these are the data. For the project, there are 5 materials that are needed: P, Q, R, S, and T. 5 materials, just 5. And then in the next column, we have how many units of the given material is required for this production. So we know that it is required 400 units of material P, 230 Q, 350 R, 170 S, and 120 T. So this is what we need to produce this project. Now, we have our inventory, our stock in our company. So now we could see how many units we have in stock. So we could see that we have 0 of P, 100 of Q, 200 of R, 140 of S, and 120 of T. I hope you follow me. I cannot check, but I believe that I'm not too fast or too slow. Then the next column is the historical cost per unit. I mean, at what price company bought it. And of course, if there is 0 in case of P, it's not available because it's 0, right? Nothing in stock. But in other cases, we do have 62, 48, 33, and 40. The next column, it's the sales value. I mean, if we want in our company to sell on the market any of these products, P, Q, R, S, and T, we could have this value. Of course, in case of P, because we do not have it, we just don't care about sales value because we don't have it. But in other cases, we could establish a sales value. And we establish the sales value at 50, 23, 12, and 0. So it looks like T has no sales value at all. When you are good managers, you see this might be some kind of problematic thing. We will see it later. And in the last column, we have the replacement cost per unit. It means if we want to go on in the market and we want to buy this product, material, P, Q, R, S, and T, this is what we will have to pay. So the current, would say, market price of this is, of the P is 40, of Q is 64, of R is 59, and S is 49, and T is 69. I didn't probably mention this, but it would be very useful to have it handy for the later calculations. I will have to go up and down while explaining, because I will just explain how we will properly value this. I will explain how properly we will value this project. All right? So because we will have quite a number of very important information, because so far we don't know how to value, because we have several different prices, several quantities, and so on. Because when you see at the very first glance, it looks, at least, that we do not have enough P, not enough Q, not enough R, and not enough S. So let's think about that. We come to additional information. And this additional information is really important because material Q is currently used for a variety of jobs. Let's see. So P we do not have at all. Q we have, but it's normally used. All right. Now, materials R, S, and T, they are in stock, but as a result of previous overbuying. In general, we'll have next information, but we just bought it in the past. We have it in our stock, so we have some ends of purchases in our stock as a previous overbuying. We bought it too much. So we have it still in stock. The first information that we have is that no other use for material R can be found. I mean, unless we participate in this project, okay? So we have this material R, we have 200 in stock, and we cannot find any other use for this material. All right, we have another information that 140 units of material S could be used in another job, in another project, as a substitute for 225 units of a material V when this purchase price or replacement cost is $10 per unit. It becomes sort of complicated. And then, if it's not complicated enough, we have another information that material T has no other use in our factory. It is very difficult to store in our inventory, in our stock. And we, as a matter of fact, currently, we are not able to find a buyer for it. And this is sure information. Let's see product T. You see product T, actually we have it 120 and sales value is 0 because we cannot find any buyer. More to that, if we want to get rid of this material T, just to throw it away, then it will cost us $160 just to get rid of the stock, just to throw it away. It will be our cost of $160. So the question is, what is the relevant cost of the materials for the job specified above, like this, and then we calculate our cost price for the job. In normal circumstances, I give it to students, and it takes sort of at least like 10 minutes for everybody to calculate. And as general, what happens, because I cannot do it now because you have this on PDF, so you know the answers. And very often, if not always, but very often, the calculations have some mistakes. So we will now consider some time really to go through it in detail as much as we could. So this is the information about the job. So how it looks like. So let's see. We come to the conclusion, let's go back, that we do not have the material P. Now, it's an easy remark. We need 400, we do not have it, we have to replace it. So what we do? We purchase 400 pieces at $40 and the cost is $16,000. So this is what we have about material P. Then material Q, because this is the information, is currently used for a variety of jobs. So material Q has to be replaced. And if it has to be replaced, because we use 230, we have, however, 100 in stock, but we use it currently for any variety of jobs, it has to be replaced. Therefore, 230 we value at 64, which gives 14,720. Where is this? It's here. Q 230, and we have to replace it at the replacement cost 64. I hope nobody is lost in the calculations and everybody follows me. Now, we come to material R. With material R, because it says here, they are in stock of a result of previous overbuying. So we do not use it for normal production. So how it looks like? We need 350 and we have 200 in stock. So what happens? 200 that we have, we could sell because we have the sales value. We do not use the material, we could sell. So this gives us the value of 200. So it's 200 multiplied by 23, which is 4,600. But as we see, we are short of 150. In fact, 350 minus 200, it is 150. And because we are short of 150, we have to buy it at the replacement cost. Sure. So the replacement cost is 59. So to be sure that we are there, let's go here. Yes, the replacement cost, sorry, my cable is sort of short. So 150 at the replacement cost 59. So this remaining part of the material R is 8,850. So let's go back to our table. So we have this material S in stock, some, because we need 170 for the production, and the quantity in stock is 140. In fact, so what happens? So theoretically, we could sell material S. Yes, exactly like we might have done in case of 200 items of material R. So material S could be sold. 140 pieces at the price of 12. Exactly. We have 140 pieces of material S, and it could be sold at the price of 12. So it gives us the figure of 1,680. But there is a but. So we have this information that 140 units of material S could be used in another job as a substitute for 225 units of material V of a purchase price of $10 per unit. If so, we now think, what is this price? So we take a short calculation of the material V and we find that is 225 units at $10 gives us a higher price, $2,250. So, as a matter of fact, our stock of material S, 140 units, we are not able, we should not be able to sell it because the price is too low. We value this at this substitution cost that we might use this instead of material V, because then the substituting cost is higher, so it's like it represents a higher figure. So what happens? In fact, we have to value our 140 units of material S at a substitution value of material V. Therefore, is 2,250. It's a bit tricky because when we come to our table, we might be somehow distorted by these data, historical cost and sales value cost and the replacement cost. And then we find by the information here that 140 units of material S could be used in another job as a substitute for 225 units of material V of a purchase price of $10. That we should value our 140 pieces, units of material S at $2,250. But again, hold on, we just valued, as we could see, what we have in stock, 140 of material S. But in our production, we need 170 units. Well, so, as it's easy to calculate, we are short of 30 units. So how we will value this? If we are short of 30 units, what we do? We have to buy it. And of course, we buy it at the replacement cost of 49. And then we find it here, 170 minus 140 multiplied by $49 gives us the cost of $1,470. I hope that this calculation is clear and it's all correct. But now we have as well material T. And it's again a tricky issue because we need 120 units of material T. And luckily in stock we have exactly that, 120 units of material T. But, so we do not need to replace it, historical cost is irrelevant, but if we want to sell it, it's zero. So we cannot sell it. So the first initial reaction would be, all right, so we value it zero, like 120 multiplied by 0, but not. Here we have a very important information that not only we cannot use material T in our factory for anything else, it's more important, this material is difficult to store and it's sort of annoying, and then we cannot find a buyer, and it's a sure information. As sure information is that it will cost us $160 to dispose this material. Therefore, in our proper valuation, when we come to this, we find that it would have to be disposed. So, if we do not use it for our job and our project, we will have to spend $160 to dispose that. So if we use material T for our production of our job, then it would mean that we are saving $160. Therefore, we put it in brackets as a minus figure, and therefore we arrive to the total figure of, total figure of 47,730. This is our figure. I know the example was huge and hugely complicated. Therefore, I would like you to study again what is on the table at the beginning. It is here. We have these data. Of course, you use the knowledge from the previous tables, but this is more complicated. So here, please study what is required for the project, for the production, how many units we have, and then these prices. And then we have this additional information. And everything on this additional information is very important in our calculation, because it's important that the Q is used currently in every of our jobs. Then it's important to know that we have R, S, and T not because we use it currently in our jobs like P and Q, but because we previously bought too much of R, S, and T. Therefore, we have to value it in different way. So therefore, we remember how we calculate this. Like R, partially it could be sold, but then it's not enough, so it has to be replaced. There's like two parts, because it's still important how many units we use in production and how many units we have in stock. This is very important. Then about S, it's like a alternative. 140 we could sell, or we could use in another production, and we value, this is the production as a substitute for V, and we value it at the higher possible level. So in this case, the substitution value is higher. Therefore, we use this 2,250. And we still remember that we have to buy the remaining part. And then the trick comes at the end, that we have this real problem with the material T, because we have it and it's difficult to store, and so on. And still it would cost us in future to dispose, to get rid, to throw away this product, and we will have to pay for it 160. So if we use it for this project as a part of production, it would mean we would not spend this 160, therefore it's in brackets as a minus figure. You must admit it was incredibly fascinating to calculate this project, and I hope if we have an example like this and we will calculate that, it will be a lot of fun and then you will know how to do it.